All right, let's dive into something huge today. We're going to tackle a big question. Is our financial system, well, is it broken? And could the answer be something called decentralized finance, or DeFi? Let's break it all down.
You ever stop and wonder why, in this age where everything is instant, our money seems to be stuck in the slow lane? I mean, think about it. We can send a message across the globe in a blink, but sending money? That can be a whole other story.
Right? We've all been there, staring at our screen, waiting for days for an international transfer to finally show up, or getting hit with these surprisingly high fees just for the privilege of moving our own money. It just feels old, kind of clunky, doesn't it?
But what if there was another way? A completely new financial system, built from the ground up, specifically for the digital world we live in now. And that's the big idea we're going to unpack right here. Okay, so to really get where we're going, we've got to take a quick look back at where we've been. Let's do a super fast history of money itself.
You know, it all started with just bartering, right? Trading your stuff for my stuff. Simple. Then we got a bit smarter and started using things like gold or special shells, commodity money, to make trading way easier. After that, government stepped in with paper money, creating this centralized system of trust. And that brings us pretty much to today, with digital banking, all our apps and online transfers. Now, each step was a huge improvement for sure, but it also cemented the system where a few big institutions, the banks, hold all the cards.
And that brings us to what could be the next massive leap forward, decentralized finance. This is where the whole story just gets fascinating.
So what is DeFi, really? Well, at its heart, it's a new kind of financial system that's built on this technology called the blockchain. And what it does is let people, like you and me, do all the stuff we normally do with money: lending, borrowing, saving, trading, but without having to go through a bank or some other traditional middleman.
Honestly, if there's just one thing you remember from all of this, let it be this simple phrase: banking without banks. That's it. That's the core concept. It's all the financial services you already use, just without that big institution sitting in the middle of everything.
Okay, so you're probably thinking, how is that even possible? What's the digital engine that makes this whole bankless system actually work? Well, it all boils down to a few key pieces of tech.
It all kicks off with the blockchain. And I love the analogy on this slide. Just picture a classroom notebook, right? But instead of just one copy that the teacher has, every single student has an identical copy. So if one person tries to sneak in and change a grade, everyone else's notebook instantly proves it's a fake. That's basically a blockchain, a transparent, shared, and incredibly secure record book that's almost impossible to tamper with.
So if the blockchain is the record book, then you can think of smart contracts as the automated rules that are written inside it. They're these little bits of code that basically run on if-then logic. If this happens, then do that. So if the borrower puts up the collateral, then automatically release the loan. It all happens on its own, no human approval needed. They're like little financial robots that never sleep.
In this vending machine analogy, it's perfect. Think about it. With a vending machine, you put in your money, that's the if, and the machine automatically spits out your snack, that's the then. There's no shopkeeper, no one to ask for permission. A smart contract does the exact same thing, but for finance.
So, last piece of the tech puzzle. How do you actually prove you own your money in the system? Well, it's all about two digital keys. Your public key is like your home address. It's totally fine to share it with people so they can send you stuff. But your private key, that's your actual house key. It unlocks everything. You have to keep it secret. Guard it with your life because it gives you total control. In the crypto world, there's this saying that's absolutely vital: not your keys, not your coins. Remember that.
Now, like any revolutionary new technology, DeFi is not all sunshine and rainbows. It has absolutely incredible potential, but it also comes with some very real, very serious risks. So let's get into it, the good and the bad. This table really lays out the difference, doesn't it? On one side, you have traditional finance, which is controlled by big institutions and only operates on their schedule, right? 9 to 5, weekdays. On the other, you have DeFi, which is controlled by code and the users themselves, and it's running 24/7. It's peer-to-peer. And that difference in speed for global payments alone, wow, that is a total game changer.
So the promise here is just immense. I mean, just imagine a freelancer in, say, Lagos, who just finished a project for a client in Canada. Instead of waiting days and days and then losing a big chunk of their payment to fees, they could get paid almost instantly, directly into their digital wallet. That is what financial inclusion and global access actually looks like in practice. You are finally in control of your own money.
But, and this is a big but, we have to be brutally honest about the dangers. Because the code is the ultimate authority, a single bug can be exploited by hackers and poof, millions of dollars can vanish in an instant. There are outright scams called rug pulls, where the developers literally just take all the investors' money and disappear. And on top of the wild price swings, governments are still trying to figure out what to do with this whole space. It's still very much the Wild West out there, and you have to be incredibly careful.
So, with this huge potential on one hand and these massive risks on the other, where is this all heading? What's the endgame here? That really brings us to the future of money.
You see, DeFi isn't just happening in its own little bubble. It's a huge piece of a much bigger shift that people are calling Web 3. It's basically the next evolution of the internet. So if Web 1 was about reading stuff online and Web 2 was about interacting on platforms like social media, Web 3 is all about ownership. It's about building an internet where we, the users, actually control our own data and our digital stuff, not giant corporations.
And this leads us to a really fascinating crossroads. Governments are seeing how powerful this technology is, and now many of them are creating their own digital money, known as central bank digital currencies, or CBDCs. But here's the key difference. They're completely centralized and government-controlled. So this sets up a huge debate for the future of money. Will it be a government-led, top-down system, or will it be the open, permissionless, community-driven world of DeFi?
When you strip it all away, though, the goal that's driving this whole movement is a really powerful one. It's this vision of a financial system that's more inclusive, that's faster, that's smarter, and that's genuinely accessible to everyone, no matter where they live.
And that brings us right back to our big, final question. Does banking without banks mean we're heading for a future where banks just disappear? Or will they have to evolve and adapt to this new world? The technology is here, the system is being built as we speak, and now the biggest question of all is what we, as a society, decide to do with it. What do you think is next?